What's up YouTube, it's your boy OMG Pips back again with another banger. And today, man, I'm going to be showing you guys exactly how I made this $500 on US 100 or Nasdaq. Let's get right into it. So yesterday was very interesting. This was in the London session. This was 3 in the morning during London Open, and price was buying, right? So as price was buying, we had this area of liquidity right here, and we had this area of liquidity. So we had two areas of liquidity, and once I saw this, I knew there was a chance for price to become bearish, because these levels of liquidity, the traders who went short here are having their stop losses just above this high. The traders that went short here are having their stop losses just above this high. So as these were relative equal highs, I understood that there was a chance of taking them out and then price crashing to the downside. And if price was to crash here, I knew there was a high chance of it coming down to this sell-side liquidity, because this is the lowest sell-side liquidity in this price action right here. And most traders that went long have their stop losses below this low and below this low. So I knew if we're purging these highs, then most definitely we're coming to purge these lows as well before price continues to the upside, right? Once price broke these highs right here with this candle, I had my market execution right there, and I'll show you this on this was the 15 minute. I'll show you this on the 1 minute as well. So this was the 1 minute, and we broke this structure right here. No, the structure we broke was this one right here. And after we broke this structure here, price was it came down, but it didn't give me enough confidence in the form of a candlestick rejection for it to come down, right? So I waited for it, and as you can see on the 15 minute, we have this line right here, right? And this line represents fair value gap type that I had on the 1 minute, and this is the level being mitigated by this candle. And once it was mitigated by this candle, we had this bearish candle to the downside, and this was enough confirmation for me to say, okay, I think price is now ready to start crashing, right? So I put my entry right there and put my stop loss just above. I put my stop loss just above this high. That is the high that you see right there. I put my stop loss just above, and I let it run. So after I executed, this is how price progressed, right? My entry was right there. Price went down, but it wasn't enough to commit, and it went higher and took out this buy side liquidity, the liquidity that I was talking about here. So price went higher and took it out, and after taking it out, it came down, went high again, took that previous high, and then it crashed, right? And as it was crashing, it started consolidating, right? Consolidating, then it crashed again. So the first valid break of structure after taking that buy side liquidity was this one right here. After we broke this level, price went down, came back up, and we had this other block in here, which this level mitigated right there. Then it committed to the bearish momentum, right? So this is the 15 minute. As you can see, entered right there, price went higher, consolidated a bit, then it crashed. It is imperative once you are in a trade to let it run. Once you analyze your setup, once you know where your entry, your stop loss, and your TP are, the next smart thing to do would be to create a trade management plan. So are you going to break even once your trade is in profit? Are you going to lock in some profits, or are you going to leave the stop loss as it is? Those are things that you should know before you execute each and every trade. You need to have a plan, or else you'll be acting impulsively once you execute the trade. So as beginners, once we see prices in profit, we are almost compelled to move our stop loss to break even, or to lock in even like 1% or something like that. But as you progress in your journey, you realize that each trade is unique. Each trade you should trust in you realize that it is important to trust in your analysis, right? So this is the way I look at it. If you have a setup and you execute that setup, right, that means you are accepting the risk of entering that setup. So why should you feel like you need to break even? Why should you feel like, in my case, the only time I break even is if price is over half of my TP. So if price crashed all the way like through the half point of this TP and somewhere here, that is when I would break even. That is when I'd consider breaking even. That is when I'd consider breaking even, after it is over half in profit, right, to my TP type shit. So to each his own. I was just putting it out there. Don't forget that. Alright, so let's continue. This is the 15-minute. We see price is crashing, and on the 5-minute, as you can see, price was hesitating, price was consolidating, and boom, eventually we hit our TP. And this was a news release that created this momentum, right? If price was like somewhere here and then you moved your stop loss to break even, you would have most definitely been stopped out right here before price crashed, right, and taken out our take profit. So when you're trading indices, when you're trading something like Nasdaq, something like gold, like I don't trade gold, but I know it is volatile. When you're trading these highly volatile pairs or instruments, it is imperative that you understand each and every instrument and cater your trade management personally to each asset, if that makes sense. All right, so from the 5-minute we go to the 15. As you can see, price entry, consolidation, news release, taking out our TP, price crashed all the way to this low right here, but our TP was right there. So our TP was at 8%. This was an 8% setup, and if we had our TP on this low, then this setup would have been a 1 to 14 or a 14% setup, right? All you have to do is understand liquidity, internal liquidity, external liquidity, all that. It's very easy. This was the money that I made from trade, $500, and after that, this was the withdrawal. You can see we cleared it. We killed Nasdaq. If you want to see more, if you want to learn more, you can join my free Telegram group. Link in the description. It is totally free. It's your boy OMG Pips signing out.
And remember, in forex we're talking about, we came in this game for money. We came in this game to earn a living. So we are not here to play games.